Hey traders, welcome back to another Stratification Saturday video with your host, me, Sara Strat Sniper. You may be asking yourself, how is she making this video? She is in Vegas right now at the FinTwit concert. It's because I planned ahead. So, this is going to be kind of a fun video on day trading. And I feel there is a right way to day trade and there is a wrong way to day trade. Everybody wants to be a day trader. And everybody wants to look at the small time frames first. In my opinion, you are 100% trading backwards. People give me a 15-minute chart and they say, Sara, where's the broadening formation? Where is it going? And to them, I say, I have no idea. I am blind looking at this chart. If I don't have higher time frame levels, I don't know what is going to happen. Your guess is as good as, mine or somebody who's never even traded before. So when you know a sector is strong, obviously XLE is very strong. Okay? We know that. But where do you get in? Where do you get out? Where are we exhausted? You have to know the answers to these questions. Otherwise, you are literally trading in the dark. So you can go to the daily time frame. You can go to the weekly. You see, I have multiple time frames on my charts at all times because that's how I know what's going on. And that's where I can see my clear exits are, my targets, my entries. I know all of these things by multiple time frame analysis. So looking at this chart, I have no idea. I can tell it's in a nice uptrend, sort of, but what do you do? So go to the weekly. Look for a setup there. What did you see? What did we have? We had a weekly 3, 2 down, 2 up reversal. So we know that that's going to go in force. So I hid my lines. Okay. So the weekly trigger is at 77.76. The weekly target is at 81.51. Okay, let's go back. You want to mark your levels. I am very consistent with my color scheme. White lines are my entries. Green lines are my targets. Red lines, if I have them on my chart, they're my stop losses. Red is stop. So let's go back to the 15-minute chart now and see if we can get a little clarity. Oh, look at this. Here's 77.66 or 77.76. That was last week's high. That's our entry on the weekly. You can get in there. Cool. You can get in on the retest. Cool. You have a little broadening formation right here. Okay. Where is price going? We know where price is going because we know that from the weekly chart. So this is how you gauge your magnitude. This is how you take your profits, how you know when to exit, okay? So this day, price opened, triggered you in. You're totally fine. You can get back in on a retrigger. It never broke below your entry of 77.76, okay? Next day, we gap up. We consolidate sideways for a while. That would be an hourly inside bar. And you would know this if, one, you can train your eyes to see tightening ranges as well as broadening ranges, or you have multiple time frames on your charts. You're looking at the hourly, you're looking at the 30, you're looking at the 15, okay? It's not quite multiple inside bars, but it is. It's sideways bars. Let's go to the 2 hour. There's your inside bar. That's the 15-minute sideways action that we were seeing. So you could have even used this signal. Okay, enter on the 212 because you know where price is going based on the weekly chart. You have to start with the higher time frames. Then you can get all surgical and snipery on the smaller time frames. So I hope that makes sense. I hope you see what happened when it hit the target. Do you see all this choppy back and forth whiplash action? That's because we had hit exhaustion. That was it. That was the target. So that's where you get out. Let's even go back to the hourly. Okay, you could have got, like I said, gotten in here. Okay, you could put your stop at the low of that candle once it triggered you in and started going. Came back, never retested your breakout. You could have gotten back in on a failed to this candle because it opened, went down, and started coming back through. So we know that outside bars are likely. So you could have entered right there at that level when this candle was open and live. It gapped up, profit taking in the morning, sideways, corrective activity down. We don't want to take it short, even though it went 212 down. We know our bigger magnitude. So this is when your bias comes into play. You know that you're long because we know we're going to 81.51. So you wouldn't want to take that. You want to wait for a strat entry. There you go. You got a 212. So enter on that consolidation. Boom. Take your profit right up here. All right. So what was that one? 78.28. Okay. So entry 1 was at the break of the week. So enter a small position here. You didn't get stopped out. Enter a small position here. That's 2 positions. You got a 212 back into full time frame continuity. That's your 3rd entry. So you can scale in, but then you can scale all out when you hit your target. You can scale out 2 parts if you hit your target, whatever you want to do. But on this 2 up, 2 down reversal, you need to be all out when that happens, because that's a reversal at exhaustion. That's where you get the hell out of all your positions if you held on to any runners. Okay? And then look what happened the following day. Price came all the way down. It would have taken out your last ad. But this is how you day trade. If you're day trading, you're day trading. You're not here for the long haul. You're in at your trigger, out at your target. This was a 2-day hold, maybe even 3. 5-3, 5-4, 5-5. This was a 3-day hold with 1, 2, 3 entries, or 1 entry and 2 ads. But that's where you want to get out. If it sets back up again, whatever, the weekly did its job. Okay? So what I want to express here, oh, and you can see our ads on the chart. And that would have been the stop out on the hourly. Do you see how good you can keep your profit if you know where exhaustion risk is compared to your target? And then you don't give a bunch of gains back because we know that price came all the way back down to like the 79 level. So I hope this helps and you can see why having, here, we can even make our weekly trigger orange just so you guys can differentiate. So your trigger from your ad. But do you see? You just don't know where you're at without longer term price targets on your charts. How do you know that this is the top? A normal trader without lines on their chart would not know that. They would be like, oh, it's getting really whippy up here. I wonder why. Well, you know why, don't you? You hit your weekly magnitude at 81.51. Get out. That's it. Trade's done. Well, what if it moves more? So what? Find a new trade. You executed beautifully. Entry in, exit out. No stop got hit. Only your target got hit. Wham, bam. Thank you, ma'am. Do it all again. All right. Thank you guys for watching. I will catch you probably on Tuesday. Probably won't be ready to trade on Monday. So, all right. Have a great day. Bye.